Hello, this is Brian Resney, President of Resney Wealth Management, bringing you an update about the economy and the investment markets. You know, over the last week or so, we've had just a little bit of a pullback in the general markets. Of course, the U.S. Is doing well year to date. I've had a number of questions, not only from my TV and radio listeners, but a few from some clients as we do some summertime reviews. Really about the whole European scenario and what's called Brexit, which is, Britain leaving the EU essentially and going back to how they used to be, which was really a capitalistic society, capitalism, instead of really more of a socialistic society, which is where they're at today. They want to go back to their core beliefs, growing their economy, be able to really decide their own destiny. And I've had people ask, does that really impact our overall markets? What would happen, to the overall markets or our economy if Britain leaves? And bottom line is this: Britain, as part of our GDP overall, is really insignificant, very small. If they left or they stayed, it really has almost no material impact on us whatsoever. We might see a little bit of short-term volatility because of it, but nothing that we would make a substantial change for or warrant any real change in our client portfolios. But of course, over in Europe, it'll have somewhat of an impact if they do leave. I personally believe they're going to end up staying. I really wish they would leave, and really what that would do is a domino effect for other countries in that Eurozone, like Germany as an example, who really prop up the economies of most of those countries. You basically take the strong people, they can obviously start expanding again, which in my personal opinion would help the overall world economies. I doubt Britain will leave, at least now, maybe down the road another 2, 3, 4 years down the road, or maybe a decade, who knows. But I think Britain's there to stay, at least for the temporary time. Of course, Germany, if something happened with Britain, I think Germany would potentially be next in line. And ultimately, again, the world economies are not going to collapse because of that. Our economy is doing okay. I've had clients ask recently, hey, do you think we should be investing in some of the emerging market economies or over in Europe? And I basically have stated for a while, we have been out of those areas, especially Europe, and our clients should be happy that we're not there, because Europe, and if you look at things like Japan, Europe in general, Germany, many of these markets are down 18, 20%, 10%, 15% in that range, while our economy and our markets, generally speaking, are up 2 or 3 percentage points year to date. So we've avoided these weaker economies, and I've talked about this before. Sometimes making money means don't lose 20% of your money, and we've done a pretty good job this year of not losing our clients' money. And again, we look at fundamentals of the economies, relative strength in fundamentals, relative strength in performance. We're in the stronger areas. We're going to continue to be in there until we start to see some more positive trends coming out of either Europe or the emerging markets, where it will warrant some exposure in those areas. Again, our economy is doing decent, no recession in sight. Garden variety pullback. I firmly believe by the end of the month we'll probably see some of this slow pullback, 2-3% that we've seen on the downside in the last week, recoup back to the upside. I'd be an investor. I would warrant being in fundamentally stronger areas like the U.S., like we are currently in. Of course, if you're a client, you have any questions, please call the office. If you're not a client, it's time you became a client of Resney Wealth Management. Make sure you have yourself a safe and profitable week.